if growth was an issue, it's not showing up this quarter. At least growth is, if anything, a few basis points better than what the street was expecting. But Pramod Gubbi, the Vice President Equity Sales at Ambit Capital, is joining us from Hong Kong for a quick take. Pramod, what stood out for us? An EBIT percentage margin of 24.7 against 23.7 expectations. Profit at 1624 crore rupees and dollar revenue at 1361 versus an expectation of 1357, which we got in our poll. Your first thoughts?
Yeah, this looks like a positive surprise for us as well, despite us expecting HCL to lead the pack this quarter, as well as has been the situation several quarters now, particularly on the margin front. On the margin front, we did expect some sort of cost-cutting initiatives to pay off, but yet, wage inflation, HCL is spread across different quarters, so there was some offsetting force. So we didn't expect a significant margin increase, so this comes as a surprise. We need to look at the details. But having said that, from a longer-term perspective, from a structural perspective, if you look, HCL Tech is coming off from the bottom in terms of the margins when compared to peers. So there's only one way to go. You talked about the linkage with growth. HCL Tech, if you remember, 3 years ago, had a different approach. It had lower margins but higher growth, and that was the period where they were investing in growth. It seems like it's paying off. Now is the time they focus on efficiency measures, cost-cutting measures, looking to bring the margins closer to the average of the pack. But we'll have to look at the details where this margin surprise is coming up.
Okay, I'll just give you a few more details on the business mix. Infrastructure, their big strong point, has grown by 5.1% quarter on quarter. The financial sector has grown by 6.8%, manufacturing by 2%. Other business services is minus 0.7%. That's the only one that's contracted. The US has grown by 0.4% and Europe by 4.8%. I would assume all those are revenue numbers. Any more comments, Pramod?
Yeah, this is in line with what we're expecting. So both remote infrastructure management and Europe have been strong points for HCL Tech, and that seems to be continuing to play out in terms of leading the growth. In fact, those two are the vertical and horizontal that's leading the growth for the industry in general, and HCL Tech has been particularly strong in those two. So I guess that's continued to play out, which means that HCL Tech should continue to lead the sector in terms of growth for at least the foreseeable future.
Pramod, the valuations of HCL Tech are much lower than its peers. I mean, trading at about 14 times FY15 versus an Infosys that's now at 19-20 times, or rather TCS, which is now at 19-20 times. Do you expect this valuation gap of HCL Tech to narrow going ahead?
Oh, surely, yes. I think it's been a while now that HCL Tech has established its position as the leader in terms of growth and margin improvements alongside TCS. Despite its continued outperformance over Infosys and Wipro, it continues to trade at a discount. There have been some legacy concerns on HCL Tech, the quality of earnings, but quarter after quarter, HCL Tech has managed to disprove the market and re-establish its credibility as perhaps the best franchise in IT alongside TCS.
Based on these numbers, would you scale up your EPS estimates?
Like I said, we need to look at where the margin surprise is coming up. If there is a sense that this is sustainable, then perhaps yes, there could be scope for further upgrades.
Okay. Just some few more details which could have aided their margin performance. One is their blended utilization has gone up. It's 84.2 versus 84.1%. So that is one. Secondly, they managed to improve their gross margins. Pramod, it now stands at 38.9 versus 38.4 on a sequential basis. But the concern is, once again, yet another quarter, SG&A as a percentage of the revenues has come down. So this time around, it stands at 12.15%. Versus 12.44% on a sequential basis. And you would know that for HCL Tech, one concern is, are they investing enough back into their business, because the SG&A percentage has been coming down. So given these are few factors which could have aided this margin performance, then how would you view the margin, and does it look sustainable?
Look, the first two are not sustainable. In our view, 84% utilization is perhaps the peak. It's unlikely that they'll be able to ramp up utilization without compromising on investing in growth. Secondly, in terms of realizations, particularly given the sort of service lines that they're strong in, remote infrastructure management, and broadly what we're hearing in the market, there is pricing pressure out there. I don't think that can be a sustainable source of upside either. Cost cutting on SGA, yes, indeed, that's been the focus of HCL Tech for some while. We do think there is further scope. Like I said, HCL Tech is still not there, even in terms of average for the industry sector as far as margins are concerned. So there's further scope to increase that to somewhere closer to 25, 26 on a sustainable basis. So if that's the case, we would think that this margin expansion is sustainable. Whether they are compromising on growth, again, I'm coming from the standpoint where they began 3 years ago, where they invested significantly in sales and marketing, and that's showing up in the growth so far. One thing to watch out for in the details would be the deal wins this quarter.
It stands at another quarter, $1 billion of total contract value. So TCV for the 6th consecutive quarter, Pramod, stands at $1 billion.
So clearly, there doesn't seem to be any sort of compromise on growth or deal win capability, despite the reduction in investment in sales and marketing. So I guess this is that element of the margin surprise is indeed sustainable.
Okay, we've got 3 earnings with us, Infosys, TCS as well as HCL Tech. Now, if someone wants to bet on any IT stock between these 3 and the earnings and the commentary so far, or whatever internals we do have for HCL Tech, which one, according to you, will offer the best upside at current levels?
Clearly, HCL Tech. Now, I would go after HCL Tech, given it still trades at about 13.5 times if you factor in the upgrades. TCS is perhaps the best done IT company in India, but at 19 times the market is factoring in all the positives. Infosys clearly doesn't give you any sort of comfort given the sort of commentary, and clearly doesn't deserve to trade at 16.5 or almost a 20% premium to HCL Tech. So HCL Tech would be our best bet.
What is your target price of
your target
on
price
HCL Tech
as well as your EPS estimates? So would you upgrade them for current or next year?
I mean, based on what we have seen, I won't think more than about 5 to 7%, but we'll have to have a discussion internally with our analysts before we come up with a number. But from an upside on the stock price and valuation perspective, look, the differential between HCL Tech and Infosys is clearly unjustified. So either Infosys will have to correct significantly or HCL Tech will have to go up. Our sense is it will be a mix of both. So HCL Tech perhaps deserves to trade at something about 15 times from the 13.5, which is a good 15% upside from now.
Okay, 15% upside on HCL Tech, so that's a thumbs up for HCL Tech. But Pramod, just wanted your view on TCS as well. Given the the muted performance that they've had this quarter, do you think the scope for re-rating on TCS reduces from here on?
I would think so. I think TCS is more of a growth story here. It'll continue to deliver the 15+% growth, perhaps earnings growth closer to 18-20%. That's the sort of appreciation you can expect from the stock. Unlikely that you will get any sort of re-rating from here.
Okay, well, just to detail, when you said you'll upgrade the EPS by 5 to 7%, what are you standing at? 85 rupees for the current year?
Yeah.
Okay, so 5 to 7 from that. You would logically upgrade next year's as well?
Yes.
Okay, fine. Pramod, we'll leave it at that. Thank you very much for joining us with your quick take on all the numbers that have come so far.